welcome to Everything About Wealth, the podcast. This podcast is focused on wealth building. I am your host, Desi Troncoso. I hope all of you are following social distancing and staying home. We're going to move on to our next episode, which we are now on episode number 18. If you were with us on our last podcast, episode 17, we had James Ng, a commercial broker, discussing changes to lending programs such as Fannie Mae and Freddie Mac for multifamily property and forbearance programs due to the pandemic. In this episode, we have two bankers with Center State Bank to discuss the CARES Act Paycheck Protection Program, also known as PPP, and the Economic Injury Disaster Loan, also known as EIDL. Additionally, they share what is happening in the market, how lenders are working with borrowers who are having difficulties, and what the new normal will be in the short and medium term. Chris Cucci is the Senior Vice President and Commercial Loan Officer. Marshall is Vice President and SBA Relationship Manager.
All right. Hey, Chris, Marshall, are you guys there?
I'm here. This is Chris.
Hey, excellent. Well, thanks for being on with us here today. Desiree's also here. And I know we gave us a little bit of your introduction, but can you tell us a little bit about yourselves and what you guys are doing right now with SBA and lending and everything else? Maybe Chris can go first.
Sure. So my name is Chris Cucci, and I'm a Senior VP and a Commercial Relationship Manager with Center State Bank, which is a regional growing bank based in Central Florida. And my primary job is working with a mix of commercial real estate investors and also business owners and helping them with any of their needs primarily related to lending, and then also some cash management as well. Excellent.
And Marshall?
I am a SBA Commercial Relationship Manager for Center State. I've been in SBA for about 30 years now, so it's been quite a while. But right now, Center State Bank is pretty much emerged into handling and processing these disaster and paycheck loans. But normally, we're a very active SBA lender.
Excellent. Well, I mean, you kind of answer the question with Center State Bank. So you do, sounds like you do SBA lending, you do commercial real estate and business lending. Is that right?
Yeah, that's correct.
Correct.
And then also, I think, Chris, you had mentioned the bank is also incorporating Fannie and Freddie products. And I don't know if that HUD as well?
Not doing HUD yet, but we are piloting in Orlando, actually, and my group is piloting right now a small business loan, the SBL program from Fannie and Freddie, which starts at $1 million minimum. And it's a neat program in that you're able to do some things that the banks typically aren't always doing, like non-recourse, advance rates up to 80%, and terms up to 30 years. So been a lot of interest in that, obviously, in the last couple of years.
Okay, excellent. So I definitely want to hear about that. But today's call, one of the important things is that what we want to learn about is something that Marshall's been working on, and it's this CARES Act, PPP, and EIDL. Really, it sounds like alphabet soup with all these loan programs. Can you educate us on what's going on, Marshall, with these programs, what the differences are, and how they work?
Certainly. Well, obviously the purpose of both programs is really to help small businesses get through these trying times. The biggest difference between the two, what they call the EIDL or the EIDL, Economic Injury Disaster Loan, that's an SBA loan directly from the government itself. So you would go to the government website, you would apply directly to the government, and the funds would come from the SBA. Those funds can be anywhere from, or be used for payroll, general operating expenses, paying vendors. Typically, the terms are extended anywhere from 10 to 25 years. You do have an interest rate and a payment term. It is pretty low and pretty reasonable, but it is a loan, and it is something you pay back, just like any other loan that you would get, but it's to help you through those tough times. The Paycheck Protection Program is really a loan itself, but it's administered through the banks. And so you would go to, hopefully, your main bank and apply for a Paycheck Protection Program loan. And same kind of thing, that the loan amount itself is based on 2.5 months of your payroll costs, in danger of oversimplifying it, but that's pretty much it. 2.5 months of your payroll costs. And then that amount you can use for payroll, utilities, rent, and interest. And the thing that people get excited about that program is, depending on how many employees you retain, a certain portion of that loan can be a candidate to be forgiven if you do those things to retain as many employees as you can. So that's it in a nutshell. And right now, the one that obviously we're getting a lot of traffic on is the Paycheck Protection Program. And with that forgiveness feature, it's very popular. And we're just warning people right now to be careful, because you do have to spend it in the right ways, and you do have to document how you spend the proceeds from that loan. And without getting too much into the weeds, the more that you keep and retain your employees, the more of that loan is going to be forgiven at the end.
Got it. That's really of what I read, that was the main thing about the loan. They were trying to keep people employed throughout the pandemic, where when things just get back to normal, people are already working, and the economy can kind of jumpstart. That was really the intention? Is that about right, Marshall?
Exactly. And every now and then someone will point out that it's called the Paycheck Protection Program for a reason, that obviously, anything that helps the employees usually helps the business as well. But the main focus is keep money going to employees so they can pay their rent and their car payment, and we can help people as much as we can.
Now, 75% of it was going to the employees. You said right now, I just talked to a lender. We were just chatting a little bit about it, that they have 400 applications with this Paycheck Protection Program. And they've even capped it where they said they're not taking any more applications outside of people that are not clients. How is your bank? How is your bank with the inflow of applications coming in? Is there a lot of high demand with the Paycheck Protection Program right now?
Chris, you want to address that?
Yeah. So yes, there is definitely high demand, I will tell you. And these numbers, it's important to remember, for example, like the lender that you might have spoken to, it's all based on the scale of their current, company. Mm-hmm. So that number could be a huge number depending on the size of that bank. For us, we have what I would call a significant number. The Center State has grown a lot, and since we first met about 4 years ago, and so we're now in 6 states. We're in Florida, Georgia, Alabama, North Carolina, South Carolina, and Virginia, when we were just in Florida when I met you guys a few years back. So we've grown a lot. So we've got a last count that I heard a few days ago, it was over 5,000 applications in for this process.
Wow.
And I have to tell you, it's just to give you a little kind of insight to what goes on. It's been really impressive watching the bank move through this. And you've probably heard in the news, the CARES Act was approved 2 Fridays ago on March 27th. Mm-hmm. Initially, the SBA had 15 days to roll out guidance to the banks, and then the banks would work off of that guidance as their policy to get these loans worked through the system. Well, a little mix of probably political pressure and just pressure from what was going on in society. They needed to move quicker. So the SBA got a lot of push and ended up having some guidelines come out late on Thursday evening last week. That would have been April 2nd. April 3rd, the program went live, and a lot of the lenders were like, man, we're really just not fully prepared to underwrite these applications yet. We just got the instruction manual yesterday, and even that manual still had some inconsistencies and things in it. So over the weekend we were working really hard, as were most banks across the country and non-bank SBA lenders, to understand what the criteria was that the SBA wanted so that we could guarantee, appropriate approvals on all of these deals. So we worked on that over the weekend. Out of 2,800 employees here at the bank, I think hundreds of them, maybe more, have shifted from their normal job roles to help support this volume of SBA loan demand that we have, doing different jobs in the loan processing aspect of the SBA approval. In addition to that, we ended up engaging a vendor that we're using, a third party, who's helping us process applications. So we're working, I would say, just about around the clock. I mean, I've had customers applying and getting responses at 11:30, midnight. But getting those calls at 6 a.m. and I'm getting calls at 11 p.m. from clients as we're working through this. So the last few days, it feels like we're just kind of clearing out that initial log jam that we had with so many applications, and we're now starting to really get them worked through our system. So it's been really impressive to watch the bank pivot and address the volume demand that we've had for the program. And you look at some of the large national banks, it's even tougher. I mean, some of them have hundreds of thousands of applications that they're dealing with. So these are some big numbers that are out there, but I think it's been impressive to see the industry as a whole react and figure out ways to get things done and help their customers.
You mentioned, and I have a question about getting some of the applications approved, and I'm just wondering, how does a business owner know how much to ask for in order to cover, because, we don't know how long, unfortunately, this pandemic is going to last. But how, as a business owner, are you advising them how much to ask for? Is it 3-6 months? And is there a cap that they can ask for assistance to be approved?
Yeah, that's a good question, Desiree. So there is a cap. And in fact, there's actually very hard set math around this. So for the Payroll Protection Program, the loan amount that you can ask for is based on your average monthly payroll. So they look back at 12 months of payroll for the company and divide that by 12. So you get 1 month times 2.5. Because really what this program was initially designed for was to cover a company for 8 weeks of payroll and the cost of either mortgage interest or rent and utilities for their business. Mm. So they figured basically 2 months and then 25% on top of that to cover mortgage, interest, or rent and utilities. So it's really a hard set number. So part of the application, I think it's a 4-page. Is that right, Marshall? The SBA app?
Correct.
It's 4-page application. And right on the second page, you do the calculation. And then what you're providing to the lender, who's then, confirming it with the SBA, is your payroll statements from the prior year. So in some cases, that's going to be a Form 940 or Form 941 from a business. In other cases, they might be providing W-2s for all of their employees. Mm-hmm. And then to Marshall's point, when you apply for forgiveness of the debt later, you have to show evidence that you have maintained the same count of employees. You haven't reduced staff, because the goal is to retain. That's what this is for. And also that you've kept those employees at the same pay level, compensation level. You didn't keep your employees and then cut their pay in half, because that's not the spirit of what they're trying to preserve here. So that has been our process. And you bring up a good point as well, Desiree, as far as what to ask for. We really don't know when this is going to end. And that's why it's good that we do have these other programs out there, like the EIDL program, EIDL, which you apply directly with the SBA for. And then in addition, Florida has their own emergency disaster program, which it's between $50,000 and $100,000 that you can apply for as well. So there's a few different routes you can go. And then on top of that, for companies that can't retain employees, of course, we do have some enhancements to the unemployment compensation now, where from a federal level, they're receiving an additional $600 per week on top of what they would normally get from state unemployment. So that's pretty substantial. And the goal there being that allows people to get some income, even when they're out of work, beyond their own control right now, so that they can pay their bills, they can buy food, they can do other things that kind of keep the economy running.
Yeah, good point. I have a question, and this is either Marshall or you, Chris. Something you mentioned is that the guidelines came out a lot faster. They needed to come out faster than what was expected by the SBA. and there's a lot of confusion out there. I've spoken to an employee yesterday, and she said she got laid off. And then I spoke to a business owner today, and he said he was thinking about either reducing hours or doing some layoffs himself. And I started thinking, I'm like, why are these people being laid off, or the business owner considering layoffs when this program is out there trying to help, to prevent this from happening? And I actually even had a conversation with the person. He said, well, I'm just not even sure if I'm going to get the money. And it seems I can't even submit an application because it's so busy. Can you talk a little bit about maybe some of the confusion that people are experiencing, and maybe try to alleviate some of those concerns from business owners that maybe are having trouble applying and are thinking about doing some layoffs?
Yeah, I can tell you that I'll confirm that there has been a lot of confusion out there to the degree that I think the formal regulations or the operating procedures from the SBA have yet to be published. So a lot is going based on the bill itself and some other frequently asked question publications from the SBA. But I think everyone has at this point a pretty good idea of how the program's going to work. But there still is, even at this state, some gray areas. But I think all parties, banks, borrowers, applicants, the SBA, the government, everyone's doing their best and trying to get this to the market as quickly as they can. If a business can be patient, I think the banking community is pretty much getting the product to market now. Mm-hmm. And if you have a bank that's participating in this program and you can get your documentation and the application in, I think these are being turned around in as fast as can be reasonably expected, I guess.
Got it.
Keep in mind, it's a brand new program and a brand new process, and everyone's trying to figure it out as we go along. But with all that considered, I think we're going to start funding, if not this week, early next week, to our customers, and that's probably going to go on for a few weeks, getting the money out. So, if you have an interest in keeping your employees and developing some loyalty there and being in the best possible position you can be when we come out of this, I would suggest going forward, doing what you can to get this money, and especially since a good portion of it very well may be forgiven, and in effect, it's a grant, free money, mm-hmm. that it's certainly worth the time and maybe some of the frustration to do what you need to do to take advantage of this.
Got it.
Yeah, that was one of my follow-up questions. And I know you can only really speak to the PPP loan because you're working with it as a bank versus others. What is a typical timeline? You may not know the answer to this, which I completely understand, from someone submitting an application to actually receiving the funds.
Mm-hmm. Well, I'll let Chris follow up on this, but in my mind, you got three pieces of it. One is for your bank to actually, for lack of a better word, underwrite it, even though there's not much underwriting to go in. We need the borrower to submit their application along with the documentation that supports how they came up with 2.5 months of payroll, and the bank to process that and review their numbers and make sure that it all looks kosher. That's step one. The second step is for the bank to submit it to the SBA, and the SBA has set up a special application process directly to them. Ultimately, the goal is to get what they call an SBA number, get a loan number for that request. And once that happens, once you get the number in, you have reserved, if it's a $200,000 loan that you've requested, you have reserved it and it's in place for you. And that's important to all the applicants that are maybe a little bit worried about the money running out before their loan gets processed. Once you get the SBA number, that's key. And I count that as the second step because it is labor intensive for the personnel here at the bank to mm-hmm. put those numbers in. And since it's an overwhelming new process that from what I understand, the SBA is, sometimes the site has crashed and they get it back going again. And right now, I think it's working pretty good, but everyone here is pioneering a bit. And then the third part, once you get the number, is to close it. And statutorily, based on the bill, the banks have 5 to 10 days to close the loan. I think there's some opinion out there that it shouldn't take that long because this particular program requires no guarantees and no collateral and has really tried to streamline a lot of the process. So the hope is that once these really get going, like an assembly line, these will be closed fairly quickly. It appears as though we can use DocuSign, and if it's just a note, a closing statement, and maybe an authorization from the government, really shouldn't be much to this, but statutorily, I think the bank has 5 to 10 days to close it.
Okay.
Yeah, no, I think right now what I would say is that I think the timeline is changing every day and it's improving. So that's the good thing. We had such an initial large wave of applicants, and at the same time didn't really have the blueprint for how to accomplish what we needed to accomplish. And over the last couple of days, I feel like we're starting to see the light at the end of the tunnel. And at the same time, as we get through this initial first wave of applicants, it seems like what we're getting on a daily basis beyond those first 2-3 days is a little bit more of a manageable volume. So I think the timeline is changing every day, but it's changing for the better. It's getting shorter and shorter. I think that by the end of this week, early next week, things are going to feel a lot smoother for us. Right now, the bank, like I said, we have an outsourced process, and then we also have an internal process that we're running simultaneously. And we did that because we outsourced the part that was kind of more simpler, cookie cutter type of businesses where maybe the ownership structure was pretty simple, no trust, multiple LLCs, nothing like that, no nonprofit organizations. So we've got the outsourced folks working with those. And then our internal group, where we require a little bit more analysis, is working with things like nonprofit organizations, which are eligible for this program, and companies that maybe have a complex ownership structure with multiple LLCs or trusts involved. And so the outsourced side of it has been running for 2-3 days now and seems to be getting better and better. And we've really started putting a lot of volume on them. And then as of today, we've really started opening up the more complex side with our internal people. So I feel like we're getting hit really hard the last couple of days, but that's probably going to start smoothing out now. Yeah, it's good though. It's good to see everybody just rallying around this, and the team is really putting everything into this right now, staying very focused on it.
Awesome. I know we're spending a lot of time on this SBA, these programs, the PPP and the EIDL. I would say that this is something that a lot of people are wanting this information out. So I think this is super valuable for everyone out there that's going to be listening. Now, a couple of questions. Can you just clarify on what you mentioned grants on 2 of them? I think the EIDL has a portion that is a grant as well. I think it's like up to $10,000. And then the SBA PPP, can you just clarify how much of it could be forgiven of the loan?
Well, as you apply, if you go for the direct EIDL loan, yes, the $10,000 of that you get for that is a grant and does not require repayment. I would say caveat there that if you do end up getting a portion of your PPP loan forgiven, the amount that you get forgiven on the PPP loan gets reduced by that $10,000.
Got it.
So, but the EIDL 10,000 can possibly come quick and fast with comparatively less questions and less bureaucracy than normal. Again, with how much that you can get forgiven without getting too much into the process. Once you get your loan, which is 2.5 times your monthly payroll amount, you can take that amount and over the 8 weeks following getting the loan, the monies you spend from that loan on payroll, rent, utilities, and interest creates the gross potential amount to be forgiven.
Got it.
So say that's $200,000, or let's say it's $100,000 for simplicity, and that's the gross amount that you spent on those 4 expenses. And last year, during the average, you had 100 employees, and at the end of the 8 weeks, you have 100 employees. The theory is you would get 100% of that gross amount to be forgiven. If you had 100 employees this time last year, and you have 70 employees now, you would get 70% of that gross amount to be forgiven. So that's probably an oversimplification, but it really helps people understand the spirit and the purpose of it. Really depends on how many employees you retain and keep. So even if you had to lay off some, like Desiree's example, at the beginning, you do get rewarded for rehiring them at the end of the period. So if you had 100 employees, you let 30 go, but then you hired 15 back, you get 85% of your gross amount to potentially be forgiven. So there is some more nuances to that, but that's pretty much it in a nutshell, at least the way that I understand it. And it really does promote and reward those businesses that keep as many as possible on their payroll.
There you go. Thank you, Marshall.
Great. So a question I have, because I know a lot of our listeners are real estate investors as well. And that's kind of a circle that is out there also asking questions. How would these loans be applicable to investors that own multifamily properties? Because I know we don't have a lot of employees because we may have a third-party property manager or so forth. So how would they go about applying for a loan like this? Are we only looking more at if utilities, mortgage costs?
Yeah, and I would even add more than just multifamily. I would add just real estate investors in general. How would this program work with these type of investments? Would they work to cover rents by any chance, or any? What could you share on that?
This is Chris. Let me jump in on that. So that is one of the limitations, that this program is really designed to support W-2 payroll, or independent contractors. Can apply directly. 1099 people can apply as kind of a sole business to get some support for their own loss of income. When it comes to passive income, like with what real estate would be included in investment real estate, it does become more challenging. And I have had calls, because I work with so many CRE investors. I've had calls from, as an example, retail center investors who have been heavily, impacted by what's going on, because the restaurants can't open, and there's not really anything going on right now. And it's interesting to see that too, because I'm sure you guys being in the real estate business, over the last 5 years or so, the hot thing in retail has been talking about being Amazon proof, right? Avoid the Amazon effect. And how did we do that? Well, the big box retailers, we were slowly shying away from that. And we were filling up our retail centers with experience-based retail, right?
Exactly.
So the gym, Massage Envy, all these things where people congregate, restaurants,
all that.
Hair salon, right? So all the stuff that we said you can't replace with e-commerce. And then what happens, we have this black swan event, the pandemic occurs, and what does it do? It impacts all of that business severely. So what you have to do in those cases is really communicate with your lender. And my best clients, that's what they've been doing. They called right away and said, listen, we're planning on paying, but we don't know if our tenants are going to pay us. And that's obviously going to strain this. So we need to know what options are available. And there is no blanket program coming from the government to provide relief for that. But what you'll find is that banks are creating their own internal programs to support those customers. So just as an example, one of the things we've been doing is looking at payment forbearance agreements for some of those clients. So we are able to give you a pause, essentially, on paying your loan for a period of, right now we're looking at 3 months typically. That gives you the relief that you're not having to make that mortgage payment for 3 months. And all we really do is tack it on the end of the loan. Basically, if your loan was maturing in June of 2025, Now it will mature in August of 2025. So it doesn't actually add any more cost to the loan for you. It doesn't increase the amount you're paying interest on. It's just stopping in time, giving you 90 days to recoup. Hopefully that gets us through this, and then we revisit at the end of the 90 days and hopefully things are up and running again. Some of the other things that we're doing is making sure that our property owners are communicating with their tenants. For business tenants, retail and office, obviously they should be educating them on these programs, the PPP and the EIDL program. For your residential tenants in the multifamily world, making sure that they're aware of the unemployment benefits that they're out there and that they are going through the process and signing up. I've seen a lot of my clients on the property management side who are doing that. They're creating frequently asked questions or one-pager infographics that explain how to apply for benefits in Florida, how it works. Also, another just kind of out-of-the-box thing I've seen, you've probably observed this as well, is some of the large property management firms are doing either a GoFundMe or they themselves are creating a support fund to provide relief to their tenants. So right now, it is difficult for you guys, and I definitely sympathize with the commercial real estate and the multifamily real estate investors, because these programs, for the most part, unless you have W-2 payroll wages on your books, the programs aren't going to do a lot for you. So it's really about communicating with your lender and thinking a little bit outside the box on ways that you can help your tenants help you. Got
it. Now, you mentioned, that was actually the next question, and you answered it great. You mentioned the forbearance programs that you're offering. Now, how will the bank look at that borrower in the future? It's just going to be an explained blemish on the credit report per se? There was a pandemic, everybody got hit, or are those borrowers going to be, I would say, not looked down upon, but you understand it's going to impact their credit rating with the bank? What are your thoughts on that?
Well, yeah, so there's a couple things to look at with that. Number one, I would say always this is going to be different with each lender, but I think at least from the other bankers I'm talking with in the market right now, it's pretty consistent. We're not going to be reporting derogatory on credit. We're not considering it a past due payment or a missed payment. So you're still considered paid as agreed with us as the bank, because we know that this was a situation that was really beyond everyone's control. The things that we look for when somebody does request a forbearance is we're going to ask them for a personal financial statement just to see what their own financial wherewithal is. And if we see large cash balances on there, it doesn't mean we're going to say no to the forbearance, but we're going to ask a little bit more of questions, and ask, well, we see that you have a good amount of cash savings. Is there a reason you're coming to us for the forbearance now versus using some of that money to pay the loan payment for the next couple of months? And in many cases, I found that people have very good reason for that. Typically that they have more investment properties than just the loans they have with my bank. They might have those with many other lenders as well. And if you look at it on an aggregate, it's going to be very difficult for them to service that debt if they don't have money coming in. So a very explainable reason. The other thing that we will ask for is we're going to ask for a year-end statement from 2019 for the property. And what we're looking for there is to make sure that the problems, the hardships that they're coming to us with are related to the coronavirus situation, that they weren't already having issues and using this situation to, to basically supplement for something that was a greater problem. Mm-hmm. And once again, it doesn't mean that we're going to deny the forbearance at that point. It just means we have to do a little bit more investigation and make sure we really know what the problem is. If there's a bigger problem, then we need to understand that as well. But again, communication is so important. The worst thing I think someone could do right now is if they're having problems, avoid talking to their lender. At this point, we're expecting people to come to us. We're reaching out, of course, as much as we can, but at the same time, as much as we want to be proactive, we're having to be somewhat reactive right now just because of the volume of calls that we're getting. So I hope that my clients are going to reach out to me if they are in trouble or if they foresee trouble coming in the next couple of months, just so we have a heads up and so we can figure out options sooner than later.
Yeah. Yeah. So that you're saying that it's not the time to be a hermit crab right now and just go into your shell. It's a good time.
Yeah, absolutely.
Excellent. Yeah. So can you share some insights on bank appetite for loans pre-pandemic and now post, or maybe not current because we're still in it, but what do you see past the pandemic
in the future?
In the future? Yeah.
Yeah, I think this is Chris. I think that things as they get back to normal, we'll probably see a lot of the same level of appetite for the same sectors that we had prior to. I think I mentioned earlier the Amazon effect and what that has done to retail, but I don't think this is a short-term problem there. I do know that a lot more people are shopping at the Home Depot and Target and Walmart right now, and I think that's just because Amazon is out of everything and shipping is delayed, right? But once those supply chains are reinstated and things are running smoothly again, I think people will migrate back to the convenience of Amazon, or if they're using local retailers, they won't be going in. They'll be using that last mile distribution and getting things delivered to their home. So I think we'll fall back into those patterns when it comes to retail. And then, of course, the effect that has on industrial and distribution centers for the last mile distribution. I do think the longer that this situation drags out, it could have a heavier impact on the multifamily sector. And I know that's your specialty. You could probably speak more to that. But I've been on a few calls over the past 2 weeks. And I do know that there has been an immediate impact on the implied cap rate nationally for multifamily, where it was averaging about 4.8 year to date. That cap rate has blown up a bit to about 6.9 in the current month, which is pretty substantial. So I've heard from a few people that are on the institutional lending side in multifamily that they feel pretty strong about the Class A, Class AA type product. Only because typically those are professionals, higher wage earners that are in those properties. And for the most part, a lot of them are still able to work from home and continue to earn income right now, which is very fortunate. You might see, though, a drop down, like, for example, your Class C or Class B residents may have some income issues and may step down to a Class C type apartment, or you may see the same thing on the single family side. Maybe that individual who was comfortable renting at the $2,500 to $3,000 a month level is now looking for something at $1,500 to $1,700, so we may see some cutting like that over the short term. But I think as soon as things get up and running again, jobs start moving again, that should probably bounce back as well. And then the last area that Marshall and I have talked about this a few times recently, and we think it'll be interesting to see, is the office market, because we're all adapting to a different way of working right now with Zoom meetings and working from home. And now I look at a business like our bank and I say, I just can't imagine a world where we wouldn't go back to the office, because we're so, as much as we don't want to be, we're still so paper driven. And we need those face-to-face interactions in our businesses still to a great extent. But I could see certain businesses, I've talked to some of my construction contractor friends recently, and they said, so-and-so, who's our office manager, has been working mostly from home lately, and actually, seems more productive or just as productive as when they're in the office. And it's making us think, do we really need all this office space? So, maybe we see a little bit of a consolidation or a shrinking in the amount of office space that companies require in certain industries. So I think that'll be something to pay attention to. I think we might see a little bit of a transformation there. As far as our bank's appetite, we typically are open to looking at just about everything. We don't do a lot of speculative construction. So we're looking at primarily, if we do new construction, it's going to be pre-leased, at least some percentage of it pre-leased, or a build-to-suit project if it's single tenant. On the apartment side, we have been fairly conservative for the last few years. Just because of some concerns with the level of building that is happening. But I will say that I'm grateful for that right now, because we're in a tough position. But I think once things normalize again and we start seeing that net positive population growth in Orlando and tourism can come back to life, things will probably start picking up again there as well.
Got it. Now, can you talk about hospitality? I know restaurants, but specifically hotels as well. Does the bank have any of that in their portfolio? How is that? How is this pandemic affecting the appetite, even if you don't have it, of maybe potential lenders in the future? Because I know it's getting hit pretty hard right now.
Yeah, hotels are being hit really hard right now. Again, I would say, fortunately for our bank, it was never a big area of focus for us on the hospitality hotel lending side. I think Marshall's group of the SBA side had a few hotel deals in the last few years, but not too many. And immediately, of course, when this crisis hit a few weeks ago, that was one of the first things that we did was look at our bank portfolio and see how much of it was in a few sectors we were concerned with: hospitality, restaurants, and then also logistics. And that surprised me initially. I thought of it and was like, well, gosh, I figured the logistics would be doing better than ever in trucking because people need products right now. Mm-hmm. But then I talked to a friend who's in the business and he said, well, yeah, they need products, but some states are not letting you in. So there has been a big slowdown in a disruption in supply chain. So that's that's really hurt that industry. So those are three that we've looked at. Unfortunately, again, it was a very fractional percentage of our total loan portfolio. So it hasn't impacted us too much. As far as going forward, that's another area where I think you could see some transformation. Number one, it's the hotels. Obviously, occupancy is down in almost to the single digits now. I think it's somewhere in the 10 to 20% occupancy, where we're used to seeing closer to 80% in Central Florida. And the challenge we're going to have with that, the concern is how long can these operators hold on? So I think you're going to see a lot of larger operators, of course, who can weather the storm. Some of your smaller, more localized operators, it's going to be a lot harder for them because they're such capital-intensive businesses. You have to have a lot of employees to run a hotel. Just because it's empty doesn't mean you pay 20% on utilities, for example. You still have to air condition the whole building. So things like that are somewhat fixed make it really difficult when the occupancies drop this low. And I think, unfortunately, what we'll see is we'll see some of them survive. Some of them will probably go under at this point. And then you'll see some buying opportunities. And I'm sure you're going to see some funds coming into market, hotel REITs, for example, that are going to be looking to pick up and capitalize on take advantage of those situations.
Awesome. Great information. Before we close, I just wanted to ask you, going forward, do you see that it's going to be harder to get loans? Are guidelines going to be stricter in the future? For example, requiring additional reserves due to this pandemic? Or do you see banks, like you're saying, also looking at this as a short-term black swan event and kind of going back to business as usual?
I think that's going to depend on what lenders see, from reactions from the rest of the world. We have to look at what kind of contingency plans our government puts into place, for example, that give us a little more comfort that if something like this were to happen again, we might have a better, emergency contingency plan to follow. It felt a little bit slow sometimes to me, how we were reacting to this across the country, and some communities were reacting faster than others. And that may have caused the spread to be a little more aggressive with the disease than was necessary. So I think that's something that you're going to see, change. Obviously, it will become a bigger focus for all of us as citizens of this country. And because of that, with the power of our votes, I would think that, we're going to make sure and hold our politicians accountable and our policymakers accountable to put better plans in place to make sure that things are not as severe should we have another crisis like this. So it's a little early to say from the banking side, I think, or lending side, because it's really going to fall back on that. As far as the holding higher reserves and things like that, again, I think it's something that we'll probably have to see as time goes on.
For the SBA PPP loan and the EIDL loan, is there a deadline right now where they foresee you have to apply by this time, or the program is going to stop accepting applications as well? Or is this an ongoing loan that they're going to do in the future? Do you know?
Well, I think that the program technically is until June 30th.
Okay.
But the bigger opinion lately is that it'll end when the funds run out, which a lot of people think that'll be long before June 30th. So the real deadline, if it goes the way a lot of people are thinking it goes, is when they run out of funds. Now, from my understanding, obviously the initial $349 billion was approved, and that's what we're working through now. It is my understanding that there's another $250 billion that's being teed up, but formally it hasn't been approved. That may have changed. But last I heard that it looks likely that they're going to approve another $250 billion for this program. and we're all here keeping our fingers crossed that that's what's going to happen.
Great.
All right.
Thank you for the information.
Yes, thank you both for all the information. And this being a podcast focused on financial education and teaching people on wealth building, and any business book or real estate book recommendations that you'd be able to share with the audience?
I've got a couple of books right now. One I just finished reading a couple of weeks ago that I loved, and it was by a local author, Blaine Strickland, wrote a book called Adapt. Blaine is a CCIM here locally. He's also nationally known as a CCIM trainer and a coach for commercial real estate professionals. This was his second book. His first one was called Thrive, but Adapt was a really timely book to read right now because it's about transformation and disruption in the real estate industry. So I highly recommend that. And then the other one I would recommend is a book called Irrational Exuberance by Robert Shiller. If you've ever heard of the Case-Shiller Index,
Yes.
Which is used a lot in the housing world. So that's him. He's one of those two. And that book, I call it it's the playbook for predicting recessions. He's written 3 or 4 volumes now, and he's always 3-4 years ahead of the curve, talking about things like the housing bubble, the dot-com bubble. Most recently, actually, the book, he wrote a version of it, I think it was about 4 or 5 years ago. And he was talking about the bond market, yield curve inversion. And then, of course, what did we start hearing about within the past year and a half? So he always seems to be seeing things a little bit in the future. And I would say that that book is a great one to read, and it's a good one to revisit every time he comes out with a new edition.
There you go. I think I've heard of Irrational Exuberance, but I heard it from Alan Greenspan, I think, in one of his quotes. But I think I definitely need to check that book out with Robert Shiller.
Definitely.
Now, I was going to ask you, what do you think separates? I know a lot of business owners, a lot of real estate investors. They may talk to you, reach out for loans for different things. What do you think separates the people that actually reach out and go ahead and close their first loan and kind of grow from maybe $1 million to a $10 million business versus the ones that actually never are able to get it off the ground? What are some of the skills or attributes that separate those people?
I think you have to be driven, of course, and have a vision for that next level that you want to grow to. But beyond that, the most important thing to me is that you build a team of trusted advisors, not when you need them, but build it now for when you need them. So have a good CPA, a good attorney, a banker, a business consultant, part-time CFO, whatever you want to call it. You need those people to help take you to the next level. And also, don't just pick someone because they have the title, but pick someone that knows your business and your industry. If you're in multifamily, find people that know multifamily inside and out, and people that can leverage on the areas that maybe are blind spots for you.
Excellent. All right. And how do people get in touch with you guys, whether it be for commercial real estate loans in the future or anything else regarding lending?
Cell phone and email works for me. I'm easy to find. You can also, if you look us up on centerstatebank.com, Marshall and I will be listed in the commercial section there for if you look up Orange County. So you can find us that way. And then what we'll do is also provide you with our contact info in an email so that you can hopefully share it on your website for any of your listeners who are interested.
Excellent. All right, guys. Well, thanks again for being on the call with us today. We really appreciate the information. It was filled with a lot of nuggets, and we'll let you guys go so you can get back to work.
Thank you so much.
Thank you.
Take care.
Thanks, guys. Good talking with you.
Same
Take care.
here. Bye-bye.
Bye-bye.
Thanks for tuning in. Hope you were able to take advantage of all the great tips Chris and Marshall shared. I hope you enjoyed the call and that you learned about the new lending programs from the CARES Act. To get in touch with Chris for more information, make sure to reach out to him at 407-414-5474 and Marshall at 407-463-9690. We will also have their information on our website. If you found the information valuable, please make sure to leave us a review wherever you may be listening. To learn more about real estate investing or how to be a capital partner, visit our website at www.everythingaboutwealth.com. With that, we'll see you on the next show.